Hello everyone, good morning, good afternoon, good evening, depending upon when you are watching this video lecture. As part of one of the important aspects in the subject of cost and management accounting, let us discuss about standard costing. For CA intermediate, standard costing generally is having a weightage of 5 marks minimum, that is guaranteed. Occasionally it can go up to 10 marks also when all variances are asked. But definitely, as a chapter and as a concept, this is very important, not only at the intermediate level, but even at final level, when we can call this as a performance evaluation or performance management. Before entering into this topic, what are the learning outcomes of this topic if we observe? First of all, we should understand the basic concepts related to what is the standard cost and what are variances, and the theoretical aspects related to what are controllable and what are uncontrollable variances. Mostly the conceptual part is theoretical in nature, whereas the real problems that appear in the examination will be related to computation of variances. And computation of variances will be naturally in relation to all the types of elements of cost, material, labor, and overheads. As we are already aware, irrespective of the size and nature of the organization, every organization will have all the three elements of cost. Whether there will be little bit of more percentage of material or less, more percentage of labor or less, same likewise for overheads. That may change from organization to organization, but still every organization will definitely have all the three elements of cost involved when they are operating. But while they are operating, as the two important aspects of the objectives of the cost and management accounting, one is cost ascertainment and second one is cost control. Both of them are important aspects of cost and management accounting. We are aware of that. The earlier parts related to the elements of cost or cost sheet or computation of total cost related to any particular organization in accordance with the data given, all of that will be forming part of cost ascertainment part. But the cost control is equally important, as parts of the elements within the material or within the labor. We have observed some of the aspects of cost control. For example, some of the aspects of inventory control, like following some levels or having some techniques being used, like economic ordering quantity. Those all will be forming part of the material control or inventory control at a broader perspective. They are definitely part of the control aspects, because continuously the recording of materials should happen. That might be useful for ascertainment of the material cost, but simultaneously the control aspect also will be there, while physically checking the material and actually comparing it with the quantity of materials on the record, and if there is any difference, why that difference is there has to be found out. Normally that is all done in stock audits conducted periodically in the organizations, but that is all part of material control. Same way within the labor control also, ascertainment is one part, but control definitely is also another part. Of course, this is a vast topic. Practically speaking, controlling the labor cost is a very scientific thing that has to happen in the real life, using work studies, motion studies, time studies, having proper job descriptions, job evaluation, performance measurement. All these things will be part of labor control or labor cost control, we can say. So as parts of elements, Always there will be ascertainment part and control part anyway. But is that the only control that is required at an operational level, which is done by, let us say, storekeeper or a HR manager? Is that the only control, or will there be any control at a broader level, higher level, management level control also? Has to be understood. Definitely at operational level, there will be many controls, no doubt, as we observed in the topics of material and labor. But in addition to that, there has to be a control, overall control at higher level, that we can call as managerial level or top management level or middle management level. So what kind of control tools or techniques they can use? There are many of them. Practically speaking, there are many of them. But what we normally observe are broadly two things. One is budgetary control, and the second one is our topic, that is standard costing. So these two are, we can say, techniques of costing which are used for the purpose of overall cost control in an organization. And once again, we have to keep in mind what is control. Always we have to understand the basic concept of control. What is control? Control is nothing but, if we have a path to go, are we going in the same direction or are we deviating? If there is a deviation from the original path, we have to bring it back to the original path. That's what is control simply means. In other words, doing as per plan. Whatever is planned, if we can achieve that, we are under control. Whatever is supposed to be done, if the organization is doing that, that means it is under control. If organization does not have proper control, naturally what happens? The direction will be different. So probably the organization might have thought this way, and actuals may happen some other way, which are not really matching with what has been planned. And that is not a good sign for any organization, because any organization would like to have their plans implemented according to exactly the same specifications, same forecasting or same budgets. So the nature of planning itself is like that. By itself, planning is useless. That's why there is a famous quotation which says, plans are nothing, but planning is everything. So just by having some plans, it is not going to be of any use. But does it mean we don't need to have plans? No. Definitely there should be plan. But that plan should be definitely followed by the implementation of that plan in the same way that is planned, in the same way. But practically, it also so happens that exactly whatever is planned may not be happening. Because when we say plan, we are talking about future, and future is uncertain. Because of various factors suddenly which might arise, or many external and internal factors might lead to a bit of deviation from the plan. But the point is, if we measure how much is the deviation, then we can understand whether this deviation is dangerous or not. If we say that philosophically, anyway deviation is going to happen, it's okay, let it be. If we say like that, then the deviations sometimes may be more dangerous, and sometimes they may be completely going in a direction which the organization doesn't want to go. That is why proper control is required, both at operational level, middle level, and even at the top level. And what we discuss here as part of standard costing is a kind of middle level management control systems. Of course, the same thing will be extended to the strategic level performance management. That's what is called costing in final. In CA final, we will be discussing the similar topics, the concepts of which are already going to be known at the intermediate level, but application of which will be little at a higher level later. But as of now, restricting ourselves to the syllabus and what is required or expected of us, we will stick to the computation of variances related to all the elements of cost. In other words, we need to compute by the end of this chapter material variances, labor variances and overhead variances. Then what is variance? Variance is nothing but this, what we planned, what is supposed to be done, but what has actually happened. That's what is a variance. And we need to compute those variances in this chapter. That is the basic structure of this chapter and importance of this chapter, we can say. But as usual, there will be always a question, why do we have two different things? One is budgets and other one is standard costing. Budgets is also a management tool with a similar purpose of forecasting what is supposed to be done and checking that with what has actually happened and checking whether what has happened is in line with what was forecasted or not. Everything looks similar, like standard costing what we talked about. As far as the process of budgeting is concerned, it is more related to the forecasting of the size of operations, scale of operations, we can say. Whereas standard costing is more related to the performance at the ground level. For example, if 10,000 kgs of materials is going to be purchased in the next year, if it is a budget, and if 10,000 kgs was purchased, then as far as budget is concerned, the purchase budget exactly has been met and looks like nothing wrong with that, because that was budgeted and that has been actually purchased also. But is that true? Whether these 10,000 kgs are purchased at the same rate, same price at which they were supposed to be purchased, that also has to be checked. So the point here is to note, budgets is a more comprehensive view of checking the forecasted results with actual results. That is a broader level thing, we can say. That is budgets. And that is why it includes a lot of quantitative budgets also, including production budget, which is a quantitative budget, purchases budget, materials purchases budget or materials consumption budget. Material purchases budget can also be called as material procurement budget, but these are all quantitative budgets. And from those quantitative budgets, we will make financial budgets also about the projected level of operations or level of activity of the organization for an upcoming period. That is the purpose of budget. Whereas standard costing or performance management goes into the minute details of each element of cost. It will not only check whether forecasted activity has been achieved or not, it will check that also, but it will not stop there. It will also check whether the forecasted activity is achieved in accordance with the way it should have been done or not. So for everything there is a way in which the organization was supposed to perform. That's what we can call them as. That is why performance standards. That is what is standard. And standard costing checks whether those standards are achieved or not, whether there is any variance in the actual performance when compared with the standard. That is the major objective of standard costing. To put it in a very simple way, just for understanding purposes, we can say budget will tell us what the cost would be. What the cost would be. That's what the budget's objective is in general. How much would be the cost for a upcoming period? That is budget. But standard will tell us how much the cost should be. So with the simple grammatical variation of these two, we can understand the difference between budgets and standards. Both are important. Both will have their own role in the organization, no doubt about it. But standard costing definitely goes into minute details of why it happened also. Budgets will tell us, okay, this is budgeted, this is actual, there was a difference. Fine. Good or bad depends upon what is the nature of difference. But the standard costing will not stop there. It will go further into details. Okay, boss, there is a difference, fine, but why it happened? What is the reason for that difference? Did it happen because of the inefficiency of the people who are working in the operation? Or did it happen due to the external factors which are not in the control of the organization? So are these variances occurring due to controllable reasons or uncontrollable reasons? That has to be checked in detail. And if we do that exercise, that's what is performance management, what is popular in the real world. For us as a chapter, we just call it standard costing. That is easy for us. So the standard costing will take the standards first. It will set the standards first. Of course, we are not going to set the standards, don't worry. That will happen in the real life. Our job will be only to check what is the variance between standard and actual and why it happened. To analyze that is our job, which we will do with some of the formulae which are available in a relatively easier manner. As far as examination is concerned, that's what is the overall objective of this chapter. But to understand it conceptually, we need to know this standard setting process is a very important aspect in the organizations. Once the standards are set, then only they can be checked with actual performance, and then only the variances that we compute will have some meaning. If the standard itself is set wrongly, naturally the variances will not have any kind of meaning also. So in this chapter, again, we are not going to determine how much the cost should be. That's what is a standard, which will be already given in the question. We cannot go to the factory and see what is the actual performance. That will be also given in the question. Our great job is only to compare those two and find out variances and also find out why those variances are occurring. That is our objective as far as examination is concerned, examination point of view is concerned in this chapter. So that's what standard costing is all about. There is a subtle difference definitely between budgetary control and standard costing. Budgets will give a direction to organization. Both of them will give a direction to organization, but budgets will tell how much the cost would be or could be for the upcoming period. That is a forecast of a level of activity and related costs at that level of activity. That is budget. Whereas standard is about the ground level efficiency and performance productivity, which are actually related to the real operations. So that is the broad difference. That is why the standards will tell how much the cost should be. And naturally these are predetermined. That is why we are calling them both as planning tools. Definitely these are planning and control tools. Both are important and both will be used by organizations. But in this chapter we focus on the standards, actuals and variances. That's basically the background of standard costing and budgetary control. And naturally what are going to be the topics in this chapter are first to understand what is standard cost and what is standard costing. Most of that we already discussed just now. And we'll definitely have to discuss what are the different types of standards, what is the process of standard costing, what is the process of setting up the standard cost, only theoretical things. We are not going to set up any standards, that is beyond our level. That has to happen in the real life. So we are only going to know that, oh, this is how the organizations will set the standards, that's all. And what types of variances are there? This is our definitely main aspect: classification of variances and computation of variances. These are the problems what we are going to solve in this chapter. All remaining things are theoretical aspects. What are the advantages, criticism, all those things are theoretical aspects. And we have to always follow the same thing. Theory questions will be there in the costing paper, no doubt about it. But as I said earlier, some topics are more important from theoretical perspective than others. Keeping that in mind, standard costing is not falling in that chapter category where theory questions are very important. I'm not telling theory questions will not come. Nobody knows that. Whatever the paper setter will choose to ask which chapter the theory questions from. But in general, over a period of time with experience, what we can observe is this is not a very important chapter for theoretical questions, but definite problem can be expected from this chapter. In fact, all the three techniques of costing, standard costing, marginal costing, budgetary control, all three are definitely going to be asked numerically, no doubt about it. Problems will be asked from these chapters. But from a theoretical perspective, more important chapters are material, labor, basic cost concepts. First chapter, material, labor, to some extent overheads also, but not that much. Major theoretical important chapters are those. That is elements of cost. And occasionally some other questions from other chapters will definitely be there. All questions cannot be asked from material, labor and basic cost concepts. However, definitely more focus will be on those topics when it comes to the theoretical questions which were asked in the past. And there is no guarantee that the questions which were asked in the past will be asked once again. We cannot enter into that speculation. But having said that, we need to ration our time, where to focus more and where to focus a little less. But that does not stop us from reading these things. We can read these things just like that, but we don't have to do any research on them. We don't have to be too keen in identifying and understanding each and every line what is mentioned in this chapter like standard costing. At a broader level, if we understand, a conceptual level we understand, that is more than enough at this level. So that is the background of standard costing. And as usual, like any other costing terminology defined by the Chartered Institute of Management Accountants, London, this is also defined by CIMA like a control technique. That's what I have been talking about. This is a control technique, the standard costing, which reports the variances by comparing the actual costs to preset standards. That's what is standard costing simply. Okay, sir, we calculated the variances, so what? That's all? Definitely that's not all. Once the variances are found out, management will take the action, and the management will be taking action by using a concept called management by exception. This is one of the management concepts. There are many types of management concepts: management by objectives, management by exception. But my favorite one is management by common sense. That is also a very popular concept throughout the world. Different types of management gurus will have their own perspective on that, but management by exception is definitely one of the things that is followed very well in the organizations. And we also to some extent follow management by exception only. For example, just now when I said standard costing may not be that important for theory questions, what we are doing effectively we are not going to focus too much on the theoretical aspects of standard costing. But when I say materials, labor, overheads are important for theoretical questions also, then definitely we have to focus more there. That is exception. Means we focus on the areas where it is more important, where it is more possibility, where there is more possibility of risk. If we don't read and get ready for the theoretical questions of materials, labor, overheads and basic concepts, the risk of losing marks is more. If we don't read that much thoroughly the theoretical aspects of standard costing, there is risk of losing marks then also, because question may come. But the risk is less. So what naturally anybody does on a daily life also is we do this management by exception. So what does management by exception popularly mean is the top management will be only focusing on the crucial areas, important areas, and that too where there is a problem. Let us say for the purpose of ascertaining the performance of one particular department. One department wants to ascertain its performance. They wanted to go this way, they went this way only. What the management is supposed to do? They don't have to do anything because already the performance is good. Management need not take any great corrective action. At the maximum, they can take them to an annual party. That's fine as an encouragement, or give them bonus, or give some incentives to them. That's what they can do if the job is done as planned. But if the job is not done as planned, then definitely management has to intervene and ask those people who are responsible for such deviation. So the point here is management, the top management particularly, should not be involved in the day-to-day aspects. CEO of a company should not check daily whether the material in hand is matching with the stock ledger figure or not. Definitely should not be bothered about that. Normally it should match. If it doesn't match, then he will ask. So exceptionally only management should interfere. Every day-to-day operations have to be handled by the lower level category of the people, operational level, or at the maximum middle level managers will handle it. But when the variance is alarming, when the variance is dangerous, then definitely management will take corrective action. So that is why standard costing definitely facilitates management by exception, and that's a very good control technique which reports the variances by comparing the actual costs to the preset standards. That is a basic definition of standard costing which we can easily understand. Then what is standard cost? So standard cost is basically the planned unit cost of a product. So that is what is the planned unit cost of a product. We are not talking about the total cost like budgets. So here mostly this is more related to planned unit cost of the product, and unit cost means cost per unit or component or service, whatever it is produced or rendered in a particular period, and it has to be definitely used for the purpose of performance measurement and for the purpose of control, stock valuation, etc. And not only that, even in the establishment of selling prices, the standard cost can be used because we already know that how much the cost should be for a particular product. So that is the definition of standard cost. So simply what we can conclude from that definition is, boss, this is a planned cost, nothing but, and it is determined on the base of one aspect or number of bases. That depends upon the size, magnitude, complexity of production processes of the organization. We don't have to enter into that, but all that we need to know is standard cost, simply for our understanding, is the one which says what the unit cost should be, how much the unit cost should be for the upcoming period is what the standard cost tells us. And why is it important, or why is it going to be needed? What is the role of standard costing in the organization? Many of them are there. Definitely we can just understand them at a broader level. Definitely first and foremost point is to predict the future cost so that we can take some decisions, and to provide the target what has to be achieved. So the people who are working, they will not just work blindly, right? They have to know what they are working for, what is their target. So that target is set by standards. So that is a very motivational factor also, because when there is certain standard to be achieved, naturally the performance of the people will be better. When the standard itself is not there, target itself is not there, just like that blindly they go on doing their work without knowing where they are going, why they are going, and what is the output that they have to actually achieve, then naturally it will be a very unplanned journey. So we can put it this way. Let us say there is a ship sailing in the ocean, If that ship doesn't have a direction, it doesn't know which direction it has to go, naturally it will be lost. That ship will be lost in the ocean, and all the people in that ship will sink or die. What the budgets will give is the direction, no doubt. Budgets will give the direction. Okay, boss, you have to go north. Fine. Is there a compass with you? Yes, sir. There is a compass. Okay. Are we following the same track? Yes, sir. We are following the same track. Fine. That is budget. But what the standard will give? It will set the target also. Okay, you have to reach your destination in 10 days. That is the target. Daily you have to travel these many nautical miles. That is a target. That is a performance target. That is set by standards. Budgets will give the overall direction, no doubt. But standards will give individual, small targets also. For even a cook who is working in that ship also will have his own target. This much food you have to daily cook. Quantity, fixed. Everything is planned. So meticulous planning will be facilitated with the help of this standard costing technique, we can say. So that is one of the other importances or significances of standard costing. And of course the standard costing will tell us at least not like exactly, we don't know the future, nobody knows the future, but at least it will tell us or give us a prediction, a forecasting. Prediction is a bad word. We can say forecasting of future cost, which is very important, because if suddenly an order comes, if we say we don't know how much it is going to cost, first we will produce and then I will tell you, it is not going to happen like that. So for any project, for an order or an activity to be planned, to be proposed or to be forecasted, how much it is going to cost is important to know. How do we know that? By having certain standard costs for each type of element of cost, material, labor and overheads. And it also gives the targets to various people who are actually working in the organization, mostly at the operational level. That is the reason, though we call it standard costing, but basically it is nothing but a performance measurement system, and it is a technique of cost control. So that is what standard costing will be useful for. And definitely standard costing is useful for budgeting also, and that's what I have been talking about. It is useful for performance evaluation also. Performance evaluation is a very important aspect in every organization. Why? First of all, each year, whether an increment has to be given to a person or not, a manager or a worker, or any bonus should be given or not, incentive should be given or not, all that depends upon the performance. Government organizations, it's a different story. They might get increment on the basis of time. Every year they may get standard increment. But private organizations will have performance targets to be achieved, and evaluation of performance of any employee will be done by checking whether the actual performance is matching with the standard performance or not. For that purpose, the standards will be very much useful, and they may be useful for interim profit measurement. Interim profit measurement is not that easy. Why? Because we may not have all the records of all the costs actually. Normally profits can only be known after the closure of the accounts, but suddenly at the end of a month you want to know how much profit we could have made, how much profit we would have made. That will be difficult to know. But at least if you know that this much cost we are supposed to incur for this much level of activity, and this is the level of activity actually we have achieved, and we achieved this much sales. So the standard cost can be taken as a basis for calculating at least an approximate amount of interim profit. That is another use practically of standard costing, when we can create interim periods financial statements or profitability statements, and that will help us in decision making also. That will help us for other things like inventory valuation also. So all these things will be very positive aspects of standard costing, we can say. So if the question is like theory question, what is the importance of standard costing, significance of standard costing, why standard costing is needed in the organizations, then these points we can write as answer. Then moving on to what kind of types of standards can be there. It's again a broader discussion. There can be ideal standards. Certain organizations will have them. Ideal means perfectly, if everything is perfect, then how much is going to be the performance that is attainable, which is practically not possible. The level of performance attainable when the prices for material labor are most favorable. So our performance is going to be fantastic, the best possible efficiency, maximum efficiency, everything is going as per plan. If at all it goes, how much should be the cost? If that is set as a standard, those standards are called as ideal standards, and these are not really appreciated. Why? Because as the name itself indicates, those are not practical. For your general understanding, if you see any advertisement of any two-wheeler, particularly any of the bikes, they will write, it will be there on the screen, 84 kilometers per liter. 84 kilometers per liter mileage it will give, one particular bike, whatever it is. And there will be a star. And if you keenly observe that star, what they will tell is, its conditions apply, but what is the condition? Under ideal conditions. So they would have tested that bike in such conditions which probably in the world never exist. Only in those ideal conditions, fantastic road, smooth thing, no traffic, at the same speed if you are going, then it would have given 84 kilometers per hour, that too maybe only once. That is the maximum they could achieve. But they will publish it as if it is real. But actually when we buy and use the bike, maybe it will give us only 60 or 65 kilometers, that also if we are lucky. Because that 84, whatever they said, or whatever the numbers of kilometers of mileage they publish, is not practical. It is purely ideal. So those are unattainable. That means we are setting a standard which is not possible to achieve. So obviously nobody will take it seriously, right? So when unattainable standards are set, people will only just laugh at those things. They will not take them seriously. So that is a problem with that. And not only that, they are generally avoided because variances definitely will be there here. See, when you know already variances are going to be there, you cannot achieve the ideal standard anyway. So what is the point? Just to show that people have not achieved, are you going to harass them just because of that? So that is why these standards are not good. So practically these standards are not appreciated in the organizations. That is ideal standards. Normal standards are what? These are practical. These are the standards that may be achieved under normal operating conditions. Normally means under normal efficiency, whatever is general. How do we know what is normal? From experience, the organizations will know, the managers will know. There is nothing called normal which is same for everybody. So when everything is going to be normal, on an average, what is our sales demand, that is going to be met, we are going to perform at normal efficiency, then what should be the standard cost? That type of standard is called as normal standards. But definitely they also require a bit of forecasting, because a lot of things have to be known before setting those standards. We should know what is normal efficiency, what is normal sales volume, what is normal production volume. These things to be known before setting them. It has to be done. Definitely yes. But if the actual performance is abnormal, then large variances will result. But still, we cannot blame them. Like ideal standards, normal standards are good. Normally, that's what happens. That is better also to have normal standards according to the regular performance of the organization's staff and other efficiency levels that organization normally achieves. So that is normal standards, we can say, which is okay, not that bad. Ideal standards are not that practical, so they can be criticized. Normal standards, we don't have to criticize just for the sake of criticizing. They are good, nothing wrong with them. But sometimes certain standards are called as basic standards or bogey standards. Bogey means the same thing that will go. It follows the same thing. It will not follow any other route. When these type of standards can be set, when there is all the factors likely to remain constant or unaltered over a long period of time. So these standards are generally not revised each year and all. They will be same. They are not going to change. It is a basic standard or bogey standard. Just like railway bogies follow one after the other. Each year the same standard will be set. Next year what is the standard, sir? Same as last year. Next year what is the standard? Same as last year. So that is basic standards or bogey standards. Once again, under current dynamic circumstances of business environment, this is almost impossible to achieve since nothing is long term in these situations. So earlier, same type of work, same type of level of activity, same workers used to work for years and years together. Those days they could have used these standards, but in the current business environment, in the world which is very dynamic, very complex, and so fast paced, these type of standards are not again practically so useful. So when they can be set is when they have a standard, basic standard, taking a base year. So that will be taken as a base year. Of course, not that they will never be revised, but they will be revised on the basis of some percentage increase over the base year. So taking some index numbers and all, these type of standards can be revised year after year. But little bit revision only will happen. Meticulous standard setting process will not happen with this. Only once the standard will be set, which is related to base year. After that, okay, last year's prices, okay, let us say 5% increase. Okay, on the base year only, we just add 5%. Next year, maybe 7% increase. Like that, only base year will be taken as a base, and all the future standards will be set as a little bit of increase or decrease of the base year information, which is not, once again, scientific, but easy to definitely operate. So scientifically, what is the best way to do is normal standards. It requires work, definitely. That is why people are working in the organizations. Management accountants' job is that they have to evaluate what is the normal efficiency, sales volume, production volume. According to that, they have to set the normal standards. That is the best method so far, what we are looking at. Current standards is same thing as normal standards, which is related to the current period. Simple. So they reflect the management's anticipation of what actual cost will be for the current period. Always it will be for current period only. Practically speaking, nobody sets the standard for 4-5 years. Those days are gone. They have to be set for current period only. So current standard is nothing special. It is also setting the standard for the current period, because current period projection and forecasting is relatively easier, because you know how much the prices can be for the various output also. You know how much the prices will be for the inputs also. You know how much is the planned output also. All these things will be used for setting the current standards. So current standards, normal standards, both are same. Only current standards are talking about only one period. Normal standards are one which might run for many multiple years if there is no much of change in the level of activity or operational realities. So that is the types of standards we can say. Ideal standards, normal standards, and bogey standards are basic standards, current standards. That's it. Then what is the process of standard costing? This is an important theory question. This can be asked in the examinations. This should be written also very simply with these main points. What is the process of the standard costing? Simply, first and foremost thing is to set the standards. Second, ascertain the actual costs. Third, compare the actual cost with standard cost. Then once you compared, analyze, investigate the reasons for variances. Okay, once you know the variances, disposition of the variances, how they will be dealt with accounting wise. What is the plan according to that? Generally, if there is an abnormal variance due to abnormal reasons, that will be transferred to costing, profit and loss account. These are the 5 points, and a definite possibility of a 5 marks question, theory question can be there. What is the explain the process of standard costing? These are the things, logical process. There is nothing too technical about it. First, there should be a standard. Then you should ascertain actual cost. Then compare actual with standard. Then there will be definitely variances. Investigate the reasons for variances. Once you know the variances, accounting wise, you have to dispose them by transferring to costing point P&L account. Management wise, management will take appropriate action as to why these variances have occurred and how they can be avoided in future. That is management's prerogative. So that is what is the overall process of standard costing, we can say. And on a broader basis, what will be these standard costs will be divided into no other option. There are only 3. One is direct material cost, direct labor cost, and overheads. All of them will be there. But here there has to be, at a broader level, we should understand 2 things. One is that the standards are set both in quantity, that is physical standards we can call them, quantity, and in cost, that is related to price or rate. Both will be there for standards. It cannot be only one. For example, production budget is a pure quantitative budget. It doesn't have any cost. Same way, procurement budget, material procurement budget is purely a quantitative budget. It doesn't have cost. Material purchase cost budget will have cost. But here, for each standard, materials or labor or overheads, we have to have standards both in quantitative manner and also in monetary values that is related to cost. Both are there. So they can be broadly classified into two things. One is physical standards, two is monetary standards. And both are not separate, by the way. They will be there as part of each element of cost. Both will be there as part of each element of cost and standards related to each element of cost. What are the physical standards? We can generally understand. Again, no need to do research on this. Simply, physical standards means what is the quantities of the materials that we are supposed to use? How many hours are we supposed to work? Like that. Quantity is about materials related to any materials. How many kilos have to be used? How many tons have to be used? How many grams have to be used? Whatever it is. How many liters have to be used? Gallons has to be used. Units has to be used. But that is all about quantity of materials expressed as a standard. Same way, for manufacturing a product, how many hours it should take? We see so many times. Cost details of a product are given like this. Each unit of output requires 5 kgs of material and it requires 2 hours of direct labor. How do we know, sir? How do we know it will take 5 kgs of material and 2 hours of labor? We don't know. It is given in the question. But how do they know? That is when they set already the standards related to quantity and time. Quantity and time is both are physical standards only. Quantity for materials, time for labor and overheads. So that is what is physical standards, we can say. And on what basis the physical standards will be based? Definitely the company's operating plan, that is the master budget. What is the level of activity that the company is going to operate at, and how much output finally to be produced, that is production budget. The material specifications, both in quantity and quality, which should be known from the engineering department, that will have its own role in the quantity standards or physical standards, we can say. And not only that, how much proportion of material to be used in case of multiple inputs. Let us say a particular output requires 3 materials as its inputs. Let us say it requires material A, B and C. How much mix these 3 have to be? We know, okay, A, B, C, fine. But how much percentage A, how much B, how much C? That is what is mix is. So that also has to be known. How much of each of these materials has to be mixed. That has to be also known. How much percentage of each of them is also to be known. Like that. The proportion of material also to be known. And not only that, the method of production, whether it is fully automated or not. Of course, we are talking about the factors that will influence the standard setting process, the factors that will influence the standards themselves. What considerations have to be given while setting the standards? We have to look at the operating plan, we have to look at the production plan, we have to look at the quantity and quality of materials required, we have to look at the proportion of materials that has to be used for manufacturing any particular output, and what is the method of production we are using, what is the skill set of the workers already, and what is the availability of workers, and what are the working conditions actually, and any other internal factors which are important. And sometimes external factors also have to be looked at, like labor laws, factories act, government policy, etc. So many things have to be looked at while setting the physical standards, which is nothing but the expression of standards in units or hours. Units we use for materials, hours we use for labor or overheads generally. So that is about physical standards. And once again, there is a detailed explanation of how to set material quantity standards. We cannot set that. We can only know how these standards can be set. First of all, the product should be standardized. In the sense, the output should be standardized. It should be known how much material of how much quantity should be used for manufacturing 1 unit of output, That is only possible with the proper product design and ingredients of that product. For example, if you take a difference between standardized and not so standardized outputs, take the manufacturing of a, or production, it's also manufacturing of a dosa. Dosa will have different sizes in different restaurants. Naturally, yes, because that is their standard size. How much of the dosa batter has to be used for producing one dosa is what they would have already standardized. That is not going to change. From the same restaurant, if you eat dosa many number of times, you would have observed there will not be major difference between the sizes. There will be little difference because human being is making it. Imagine if there is a dosa machine, which are available also. It will exactly use the same quantity of the dosa batter for each dosa. It will not use 1 gram more, 1 gram less. Exactly it will weigh and it will use that. That is standardization. And if that happens, the standard material that is required for manufacturing one dosa can be easily known. So for that, first of all, output should be standardized. That is a point to be noted. And product study should happen. Like what? How it can be produced, what are the prerequisites, what type of materials are required, etc. And preparation of a specifications list. Same thing, just you can observe them for a normal dosa manufacturing also. Output should be standardized. What should be the output size? First you should know. For that much output, how much input is required? That you should know. What are the ingredients required? That you should know. To manufacture dosa, what are all required? That somebody, you means not you, anybody who manufactures, they should know. So what ingredients are all there and how much percentage they have to be mixed? How much water to be mixed? How much uradu to be mixed? How much rice to be mixed? Or how much salt to be added to that? There is a standard set for that. It's okay, whatever comes into my hand, I will put it. Then the taste will be definitely gone. So everything is like known, prerequisites. Already are everything known. What are the prerequisites is known. That is a specification list. And of course, before going for main production, test runs have to be done. 1 or 2 dosas will spoil and then actual output will come better. So like any simple manufacturing process of any food item, even in a bigger organization also, physical quality standards will be set in a similar way, right? Same way for labor standards also. First of all, there should be standardization of product. Yes, same thing. Labor specification, what type of labor is required? That is also important. It's like materials for labor also, definitely what kind of materials, what kind of labor are required is important. Like, do we need skilled labor, unskilled labor, very skilled labor? What type of labor you require? That is job specification and role definition should be there very clearly. And then the methods have to be standardized. If 2 different people are doing according to their own whims and fancies in the same organization, that will not work. Everybody has to work in the same way. So there should be a standardization of methods. And layout of the manufacturing has to be properly made. As we discussed earlier, time and motion studies will help in understanding how much time the manufacturing of a product will actually take for an average worker. See, while taking time and motion study, there will be all types of workers. People are human beings. So there will be a fantastic worker who can manufacture, let us say, 10 units in an hour. And there can be a very, very lethargic worker who can manufacture only 2 units per hour. We cannot take both as standards. We have to take on an average worker, how much time he will take to complete the job. That will be done by doing time and motion studies. And trial runs are always there. Workers should be properly trained to do the work what they are supposed to do. These are the practical things related to setting off labor time standards. Are we talking about money now? No. When we said material quantity standards also, labor time standards also, we are not talking about money. We are talking about quantity. What is quantity for materials? Number of units, kilos, tons, etc. What is the time? What is the standard for, what is the physical unit for labor measurement? Time, naturally. So that is why quantity and time are quantitative, not monetary. Those are called physical standards properly. Monetary standards will come later. Like this, the material and labor standards, physical standards can be set. But there is definitely a problem with overhead standards, because there is no special method for overheads time measurement only. So generally it is based on labor time only. Of course, that will be also depending upon what is the way the organization absorbs the overheads. And as we are already aware, the overheads can be absorbed by the organizations in many different ways. That can be on the basis of machine hour rate, that can be on the basis of labor hours, or that can be on the basis of output. So according to that, the overhead standards will be set. Those are not, there is no one way we can define, yes, exactly this is how the overhead standards has to be set. There is no physical standards that can be set for overheads. Physical standards can definitely be set for materials and labor. And of course, there will be problems while setting the physical standards, because it's a long process. You can generally go through that. What are the problems faced in setting physical standards can be a theory question. Generally go through that and identify key aspects. That should be enough. Always for everything there will be problem. Biggest problem is the effort required to set those standards is very heavy. It's not easy to set the standards. It will be a very painstaking and long, complex process. That is a problem practically. But those problems have to be addressed. That is why management accountants and engineers are there working in the organizations. They will take care of it. You don't have to worry about them. But after the physical standards, there has to be monetary standards also, like price standards or rate standards. What is a price standard? Price standard can be used for materials. Means we know the 10 kgs are required, but how much it is going to cost per kg? What is the market price? What is the market price that is prevailing now, and what could be it changed in the coming year? Those all things have to be considered while setting the material price standards. So material price standards have to be set also by taking many things into consideration. First of all, existing stock of materials and what could be the prices at which the future deliveries of materials have already been placed. Orders have been placed, deliveries might happen in future. If at all there is any minimum support price fixed by the government, is there anything that has to be considered? Most importantly, the anticipated fluctuation in the price levels. Once again, it is anticipated. We are talking future. Nobody knows future. But if there is a clear indication that yes, these prices might go up or down in the future, accordingly the standards have to be also changed. But definitely, since what is the biggest difficulty? Always future. When you say future, it is always complex, always uncertain. They keep on fluctuating. We may think one way and actual reality may come out to be completely different. But in spite of that, because future is uncertain, we cannot say we will not have a plan. In spite of all these difficulties and limitations, still the organization should have an idea about how much the cost of the materials is going to be, how much it should be, what is the rate at which the materials can be purchased for the current period. That's what is material price standard, or the price standard is better for that. Rate is generally used for labor. Price is the word generally attached to materials. Same way, wage rate standards also. Wage rate is for what? For whom? Laborers. How much you have to pay per hour to them. There will be differences once again. Skilled workers will have a different wage rate, unskilled workers will have a different wage rate. And they have to be also set by taking many factors into consideration. Basically, how much time they take on an average, and what is the time rate or piece rate that is prevailing in the industry, and what is the agreement between management and the workers, and of course the other laws which are prevailing in the country. All these things have to be considered while setting the wage rate standards. But most important thing about standard setting process is the standard setting has to be realistic. So material price standards, while we are setting, we cannot have a imagination of maybe there will be a 40% reduction in the prices in the next year. I will reduce the material price standard. Like that, imaginary things completely without any logical or real basis should be avoided. Such type of things will distort the standards, and they will end up in actually, I would say, creating a negative effect of this entire system of standard costing. So setting the correct standards with a proper effort is important. Everybody knows the future is uncertain, but that does not mean that cannot be forecasted at all. There are techniques for that, using statistical techniques and other techniques. These standards can be set, whether it is for material price standards or labor rate standards. And overhead standards, as we said, there is definitely a difficulty in setting the standard. It is more or less budget and standard will become similar, same when it comes to overheads. So definitely there will be classification of fixed and variable overheads, that is for sure. But it will not be based on the physical standards, it will be based on the projected level of activity. So mostly for the overhead standards, the most important consideration is level of output, level of activity, how much production is going to be happening. So that is going to be the biggest basis, and budgeted expenses. So when it comes to material and labor, standard has a more importance. Standard has more importance in material and labor because there is a physical standard also and a rate standard also. For overheads, there cannot be a physical standard. There can be a rate standard, but that rate is budgeted rate. So budget and standard become more or less same when it comes to overheads. We'll come to that. We'll see how that becomes the same when we discuss the overhead variances. But on a broader basis, how the variances can be classified: controllable and uncontrollable. Broad classification, definitely. Name itself indicates what are controllable variances. Those which can be controlled under normal operating conditions. Uncontrollable means which are beyond the control of a responsibility center, which are not in our hand, which are beyond the control of the manager whose performance we are evaluating, we can say. So that is controllable and uncontrollable, which we already know that. But other classification is favorable. This is used definitely in problem solving also. Favorable variances means what, and adverse variances means what? Name itself indicates once again. Favorable variances means those which are profitable for the company. Adverse variances means those which cause loss to the company. Simple. Which are beneficial to the organization, those are called favorable. Which are going to cost the organization more, those are called adverse. But point to be noted here, favorable and adverse are to be looked at on the real basis. For example, if you look at cost variances, if the actual cost is more than the standard cost, that becomes adverse because actual cost is more than standard cost. That is for cost variances. Same way, if the actual cost is less than the standard cost, that is fantastic, that becomes a favorable variance. But is it the same for other variances like sales variances, for example? Will it be same? If actual sales are more than standard sales or budgeted sales, can we say, why did you achieve? We will tell that marketing people did a good job and made more sales than what they are supposed to make. Then also we say it is adverse. No, you have deviated from the plan. That will be ridiculous. We will definitely tell them, fantastic job, good. You deviate, Baba, better to deviate. If you are doing better than what you are supposed to do. So there, actual, if it is more than standard, that is favorable. If actual is less than standard or budgeted, then that is adverse. So the direction of the variance has to be clearly understood. So don't go by the mathematical signs plus and minus. Understand the essence of the variance. For a cost variance, if actual is more than standard, that is adverse. If actual is less than standard, that is favorable. For sales variances or profit variances, if actual is more than the standard, that is favorable. And if actual is less than the standard, that is adverse. And usually we denote them by using these words. F means favorable, A means adverse. This is what we are going to use while solving the problems also. But once again, don't be obsessed with this plus or minus. You have to know the actual concept of the variance whenever we calculate it. Minus means adverse, plus means favorable, not necessarily always. That depends upon how we define our formula. So if our formula is reverse, then naturally plus and minus will also become reverse. So don't be blindly, mechanically calculating the variances is the essence. You have to understand the actual situation in a particular case, whether such situation is causing a harm or a loss to the organization, or is such situation good for the organization, is it favorable to the organization or not. That has to be observed closely. Without doing just formula, substitute, answer, mechanical calculations won't help. That is the point to be noted. So on a broader basis, this is the overall types of variances, classification of variances we can say, which can be again classified on a higher level into revenue variances and cost variances. Revenue variances will look at sales and profit. Cost variances will look at naturally the material cost, labor cost and overheads cost variances. What are those variances and how to calculate them? We will discuss in the next session. That is going to be definitely the key area which will be useful for directly problem solving purposes. But whatever we discussed today, I suggest you generally go through them and understand a broader level, at a broader level, what is standard cost, what is standard costing, why standard costing is important, useful in organizations, what is the standard setting process, what types of standards are there, physical standards, monetary standards, materials standards, how they will be set, labor standards, how they will be set. At a broader level, if you understand these things, that will be enough for theoretical and conceptual understanding purposes. Problem solving definitely requires formula to be known, how to compute those variances. We will discuss that aspect in the next classes, upcoming classes. Till then, take care. Bye bye. Thank you very much.